Compliance Matters. Brought to you by Lenders Compliance Group.
Welcome to Compliance Matters. I'm Jonathan Foxx, Managing Director of Lenders Compliance Group. With me today is Joyce Wilkins Pollison, who is the Director of Legal and Regulatory Compliance at Lenders Compliance Group. Today we are going to discuss Equal Credit Opportunity Act and its implementing Regulation B, and of course the disclosure associated with Regulation B, the Adverse Action Notice. What we want to do is understand how actually this disclosure comes into play. So today I think we should sort of take a look at how early in the process it takes place for disclosure and which entity does the disclosing. Joyce, could you enlighten us on those items?
Sure. The entity that should be disclosing is the entity that makes the actual credit decision. And where this comes into play, especially in our current TRID environment, is with brokers. There's many brokers making the disclosure because they're sending the application out to the lender, and the lender is rejecting the application, usually for reasons associated with the loan estimate. It's not to their liking, it doesn't have the same fees, things like that. Right. So the question becomes, who should be issuing that Reg B notice? And again, it should be the lender, not the broker.
So how early in the process is a Regulation B or an Adverse Action Notice actually coming up to be considered to be issued?
An adverse action notice has to be issued if it's a decline within 30 days of receipt of a completed application. Now, for Reg B purposes, you have a completed application when you have received all of the consumer information you regularly obtain and evaluate in the course of considering an application for that particular type of credit and that credit amount. What we're seeing now is with TRID and the 3 days to get out your TRID disclosures, we're seeing the lenders kick it back within that 3-day period. So we're seeing it much earlier than we used to.
Right. So if a loan officer takes an application and somehow indicates a credit decision either by him or someone further up line, an adverse action notice goes out even as early as that, if the action is adverse?
Absolutely. I think the best example is you have a loan officer talking about a pre-qualification request with a consumer. And during the course of that conversation, he requests the consumer's social security number for the purpose of running credit. He gives it to them. The consumer authorizes credit to be run. They run it right then and there. We see the FICO score, and the loan officer goes, Mr. Smith, based on this score, there's no way you're going to qualify for any of our loan products. Well, right at that point, you've triggered your Reg B requirements.
That's right. One final point I'd like to get your feedback on is somehow a definition to put in place with regards to what is an application under ECOA and under, say, TRID, RESPA.
The TRID RESPA definition of application is, I'd say it's more definitive. You need 6 specific pieces of information. You need the consumer's name, his income, his social security number for the purpose of pulling credit, the property address, the estimated value of the property, and what's the amount of the loan sought. Once you have those 6 pieces of information, there's no doubt you have an application and your TRID disclosures must go out. On the other hand, with a Reg B or an ECOA application, it's when you have the information that you, when you receive the information that you regularly obtain in the evaluation of credit. That can happen at any point prior to receipt of all those 6 pieces of TRID information. And as we discussed before, you could get on the phone, you're talking to the client, you get that, the social, you run credit, and at that point, anytime you're evaluating the information and making a determination, that's when you have an application for the purposes of Reg B.
I would like to close out with I guess, a controversial point, and that is actually, does the broker issue the adverse action notice or does the lender issue the adverse action notice?
It should be the lender issuing the adverse action notice. The one caveat to that is a broker can issue it on the lender's behalf, but within the notice itself, the name of the creditor who declined the credit has to be named as well.
Thank you very much, Joyce. That was very helpful, very insightful, and excellent advice. So this has been Compliance Matters. I hope you'll visit us again soon.
Lenders Compliance Group is the first and only full-service mortgage risk management firm in the United States. We offer a full suite of services in residential mortgage banking for banks and non-banks. Pioneers in outsourcing solutions for residential mortgage compliance. Contact us at compliance@lenderscompliancegroup.com or visit our website at lenderscompliancegroup.com.
This is Mortgage News Network.